Shares of Broadcom are comfortably on the road to a $3 trillion valuation, which means shares would triple from the point that they are at today. On today's video, I will show you the blueprint and the plan that this company has to execute in order to reach the $3 trillion valuation. If it does that, it should reach it in just a couple of years. And the estimates that I show you on today's video are actually relatively conservative based on the information that we know today. Let's get into it. Broadcom has a $3 trillion valuation roadmap, and it is all based on something that they said back in December, but also reiterated earlier this week on a conference call. The company says that they have a $60 to $90 billion SAM, or service addressable market, by 2027. And this is just the company's semiconductor business. Later on this video, we'll also talk about this company's software business, which prints over 90% gross margins. The combined company should be worth more than $3 trillion in a couple of years. But a lot of the growth that this company is going to recognize is the fact that Broadcom currently has 3 hyperscaler customers who are going to develop their own multi-generational AI XPUs and deploy them at varying rates over the next 3 years. In 2027, the company believes each of them has a roadmap and a plan to deploy 1 million XPU clusters across a single fabric. They expect this to represent AI revenue serviceable addressable market, or SAM, for XPUs and networking in the range of $60 to $90 billion for just fiscal 2027 alone, not including any additional revenue growth. And that is what the company highlighted on their most recent conference call just days ago. In December, they said 3 hyperscaler customers, which we'll outline and we'll kind of give you a blueprint here in a moment of just 3 that we perceive that are already on board with Broadcom. Those represent a $60 to $90 billion opportunity for the company. Now, the company also indicated back in December there were 2 additional hyperscaler customers that were also potentially going down the road of making their own custom GPUs. And on the most recent call, 2 more additional customers are on board, meaning you have 3 that are very likely to deploy 1 million XPU clusters by 2027. You also have potentially 4 more that will also be developing their own custom XPUs with Broadcom, and these 4 hyperscaler customers are not included in the $60 to $90 billion serviceable addressable market. So that means that the estimates that I'm going to show you today to get Broadcom to a $3 trillion valuation don't even include the 4 additional customers, gives you a little bit of margin for safety, and actually makes a $3 trillion valuation rather conservative. Now, if we take the 3 largest hyperscalers, which I think if we add this group of 7 up, all 3 of these would be included in there. We know for a fact Google is included in this because they already have a relationship and have been deploying Broadcom XPUs for many, many years now inside of their own data centers. I believe Microsoft and Amazon also want to be on board because they've seen the success and the profit margins that Google has. All 3 companies more recently have highlighted how much they are going to spend in 2025 on data centers, and it contrasts to what they spent in 2024. In total, these 3 companies are planning to spend just north of $255 billion in 2025 on data centers. Now, that compares to 2024, where these 3 companies combined spent $188 billion on data centers. Now, the question that I am asking is, what if Broadcom just captured 25% of these 3 companies' spending on data centers based on their 2025 CapEx number? This is a very conservative estimate. It also allows other companies like NVIDIA, AMD, and others to still capture plenty, in fact, the majority of the spend from these companies. So Broadcom only needs to capture, let's assume, 25% of the 3 largest hyperscalers' budget as it relates to spending on data centers. If they only capture 25% of the 2025 CapEx, that would represent $63.75 billion worth of revenue. And we're making a couple of different assumptions here. First of all, we're assuming that Broadcom can only capture 25% of the total spend among these three customers. The other thing that we're assuming is this 2025 budget. Number one, it remains the same out several years. And number two, we're assuming that it actually doesn't grow. I actually think both of those assumptions are incredibly conservative. These companies are likely to continue to increase their CapEx spending no matter what you hear on Wall Street, no matter what you hear about DeepSeek and these other types of things. You will have massive amounts of pressure for these companies to continue to invest in CapEx to the rate that they are doing in 2025 and likely higher as we move into 2026 and 2027. The other thing these estimates don't factor in is you do have other customers, other startups, other pressure coming from these companies, whether it's xAI, OpenAI, Perplexity, any number of startups that are coming up. We haven't even discussed Meta. We haven't discussed Oracle. We haven't discussed any business in China as well. So the estimates that I'm showing you here, I believe, are relatively conservative, that Broadcom could capture just 25% of this business or a larger percentage of a much larger cohort. I do want to keep this simple. We'll just focus on these three companies because we know their commitments as it relates to spending. And we do know that Google is absolutely a customer here. And we do know that Microsoft and Amazon will likely copy most of the things that they do. Now, what remains to be seen in the future and what needs to happen in order for Broadcom to reach a $3 trillion valuation? I think you'll see this is relatively conservative. What needs to happen? CapEx spending needs to remain consistent with 2025 levels. In fact, they could remain the same or even fall off just a little bit in 2026 and 2027, and the company would only need to capture 25% of the business to reach the serviceable addressable market that the company has already projected. Both of those things, I believe, are rather conservative estimates. Now, it's time to do some back of the napkin type of math. Now, one thing that I haven't talked about on today's video a lot about is the company's software business. This has been built up over the past several decades, just based on acquisitions, and more recently, a VMware acquisition that this company made over the last year. I annualized the Q1 revenue total that just came out, and that gets you to a $26.8 billion yearly revenue mark. Now, this is incredibly conservative. That's basically factoring no growth for the rest of this year. If you slap on a 2-year, 20% compound annual growth rate, or CAGR, basically saying that the software business is going to grow at a 20% clip over the next 2 years based on the Q1 annualized run rate of the revenue, that would get you to a $40 billion software business by 2027. And the thing to understand about Broadcom's software business is they said on the most recent conference call that this business is running at north of 90%, 90% gross margins. So this $40 billion mark is incredibly profitable, wildly profitable. In fact, one of the most profitable software business in all of the stock market. Now, what we've talked more about today is the semiconductor business, the custom semiconductors that this company is going to manufacture for the likes of Google's and others. If you annualize the Q1 revenue total of that business, it gets you to a $32.8 billion. Now, I'm slapping on a larger CAGR on this one. I did a 2-year 52% CAGR. That gets you to a $75 billion business by 2027. I want to show you how conservative this estimate likely is. Again, if we just take 25% of the top 3 hyperscalers in the market, this doesn't factor in the additional customers that I believe will come online over the next year or two, not only counting startups or high profile startups like OpenAI and like xAI. Broadcom's existing semiconductor business is worth over $32 billion. The company is telling you that it has a serviceable addressable market between $60 and $90 billion, and that doesn't factor in potentially 4 additional clients. So as you see here on the math, by by 2027, I'm only adding about $40 billion to the company's existing business. That's right. I'm only adding $40 billion to the company's existing quarterly revenue on their business. And that means that if it's closer to 60, 80, or $90 billion or higher by 2027, this $75 billion number could be significantly higher. So if you take a $40 billion software business running at about 20% growth rate over the next 2 years, you take a semiconductor business, which I think conservatively will grow 52% over the next 2 years, you've got a combined company with revenues north of $115 billion by 2027. Now, to give you some context, NVIDIA reached a $3 trillion valuation on a combined revenue total of about $130 billion in revenue. Both companies actually have similar gross margins. In some cases, Broadcom's are even better. Broadcom also benefits by this dual company software structure where you have a software business printing 90+% gross margins, and you have a semiconductor business producing similar gross margins as NVIDIA. You also have a company that pays a higher dividend payout ratio, which will make it attractive to some investors. And also, as you saw today, my 2027 estimates, I believe, are incredibly conservative, just assuming that 25% of the combined spend of just 3 hyperscaler customers gets you to the SAM that the company has projected. And we're not even including other companies like Meta, OpenAI, xAI, Oracle, among others, that are likely going to be on board at least with a percentage of their spend as we move forward. So what does this mean? Broadcom could comfortably reach $115 billion in revenue by 2027. That would require just stable CapEx spending by the hyperscalers. And I believe that the hyperscalers like Google, Amazon, and Microsoft, they will likely keep CapEx relatively stable over the next several years. That is because there is immense competition coming from well-funded startups like xAI, OpenAI, DeepSeek, among others. Also, any pullback in spending by the big 3 will likely be replaced by spending from these startups. My revenue projections also assume less than 25% revenue capture by Broadcom. If you have any hiccups by NVIDIA, as we've seen with the rollout of Blackwell, it could actually increase that. It also doesn't include any additional customers. These estimates only included the top 3 customers. If you get others on board and potentially higher than 25% combined budget spending from these 3, then the $115 billion revenue that I'm projecting for Broadcom in 2027 actually could be significantly higher. You get this up into the $130, $140, $150 billion, then this company will very comfortably triple from the valuation that it is at today. Here's your roadmap. Here's your blueprint. I see in the comments, I get questions all the time. One of your stocks is down 15, 20, 30%, and you're panicking, you're worried, you're wondering what you should do. Well, if you have a plan like this, you will buy into the stock, and as long as nothing from this plan deviates, nothing from this plan changes, like dramatic pullbacks in spending or dramatic commitments from these companies, well, then you know the plan is on track and you don't really care if Broadcom is up 15% or down 20%. In fact, if it's down 20%, you probably will want to buy more. So this is the blueprint that you should lay out with almost every stock in your portfolio. So when you have weeks where the stock might not do well and might not be performing well, and the entire market is dragging down every single stock inside of your portfolio, as long as you have a blueprint and a plan like this, it actually makes things far more comfortable. You're not panicking, you're not worrying, you're not asking questions. In fact, you know exactly what to do in situations when the stock price pulls back. That is Broadcom's $3 trillion roadmap. That's the Semiconductor Show for Sunday, March 9th. We'll be back again next week. Good luck with your investments.